Hey, what's up, traders? This is Trader Tim from eMiniMind doing a trade recap for today. It's the 20th of February 2020, and a nice little sell-off here, actually pretty big sell-off mid-morning that I caught a piece of. I wanted to walk through that. I know a lot of the eMiniMind traders also caught part of that sell-off. Nice little double top setup that we'll talk about here. And I also wanted to run through my swing trades as well. Market's not quite closed yet, but I'm heading out for the afternoon, so wanted to get a video out and run through the trades from today. Let's start with swing trades, and then we'll go to the E-mini S&P. So I am no longer in the Microsoft trade. Got the last little bit taken out today underneath yesterday's low, and that was just a matter of my stop being hit below yesterday's low, seeing as we started to rally again. I had my stop underneath this swing low back here, and as we started to put in kind of a new leg up, I have to ask myself, okay, if we were to break one of these daily candle lows, well, that would put in a lower high, as this high relates to the high over here, the all-time high. So if that means if a lower high is solidified by a break of the low for that day, then that means that the uptrend is essentially breaking down or starting to break down, and that's where I want to exit my trade. So to simplify things, where would the uptrend no longer be an uptrend? Where would the trend fail? That's where I want to place my stop, and so that's why I tighten my stop up underneath that candle. I also, BNFT made a move above its prior day candle's high this morning. But remember, when you get a gap up in a stock that's moving down, or if you get a gap down in a stock that's moving up, I always go to the first 15-minute candle, let that first 15-minute candle close, and in this case, because I was short, I just put my stop above that first 15-minute candle's high, and notice how it just keeps me in the trade. This exact same thing happened with the Microsoft trade. Back it was, I'm not going to recall the day now, but we had a sell-off or a gap down. Maybe it was here on the 27th. We gapped down, and then the low of the day was in that first 15 minutes. So that's where I put my stop, and then I was kept in the trade. Then the other couple shorts I have, BSAC. Those are all let's see. BSAC was doing good, and then the other one, SRG. That's what it was. That one I was taken out today above the high here. Again, getting short below the low of the high bar. In this case, a little inverted hammer or dragonfly doji, and then we go down, 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 trail those candles highs, and then a pretty strong push up as the broader market was moving down today. So sometimes what I'll do is split my stop up and take half off here and then leave the other half at some other juncture. Maybe it's around break even, maybe it's above a swing high. But in this case, with shorts, a lot of the times, if they start to rally, they can really rally quick. Say that 5 times, really rally quick. And so rather than be conservative with my stop, I'd rather just take it all off, and then if they get a nice little bounce, I can get back in. Whereas on the long side, with something like the Microsoft long, you get a little pullback, and it could just be a 1 or 2 day pullback, and then goes up another 10 or 20 bucks. So I don't want to get out of everything, and that's why I'm a little more conservative with the longs. But enough about swing trading. We're going to switch gears here to E-minis and talk about day trades from today. So going down to, let's go down to a 5-minute chart just so we can see a little bit more than the 30-minute would give us. So this was the the day. The first 30 minutes were really not showing any signs of much movement at all. We gapped down a tiny bit here from yesterday, and then really just, in the first 15 minutes, I just draw up the halfway backs to see, okay, are we holding? Are we breaking? Are we doing any sort of trending signs? And the answer was no. We broke the halfway back long, no to the trending anyways, broke the halfway back short, traded at the halfway back long up to highs, and that was kind of a check mark for the bulls. And then that one also held over here. This little long was, it would have been, it was certainly a valid long to take. We broke the swing high here by enough margin to come in and take this as a little long. Oops, let me grab it. There. Like that. Going over to the ticks, we didn't really have any substantial high ticks, and this was still pretty early in the day as well. So the NYSE ticks aren't the most useful in those first 5-10 minutes. So if we had a high tick in the first 15 minutes, there's a good chance that it's going to be broken. So I don't put a ton of weight on the NYSE ticks, but we didn't have a high tick at highs. So that was the first setup of the day, is that little long after the consolidation chop from the morning. I chose not to take this one actually, just because the morning was kind of messy, and I didn't want to kind of take something in the middle of the range. Even though this long setup had held, I felt like, we went from entry to target, and so drawing up the next halfway back like so, that one failed. And if I drew from lows to highs, that one was kind of hanging around down below the 61.8. So, but you could go either way on that one, and it ended up being a kind of a nice little start to the uptrend. But it's neither here nor there. This short, this little double top up here at the top of the hour, this one I also chose not to take because we had a high tick put in here and then a new high price put in just after. So that's a sign that we could keep going higher, continue to make new highs, and then a little double bottom here, and it lined it up right with the with a couple of reports coming out at the top of the hour. So I passed on that short, and we ended up going a touch higher. I tried to get in the long like this, but I didn't get filled, and that long was about a 75, lined up with this top of the first 30-minute range that you see me talk about so much right here. And we also had filled the gap right at that time. And then things kind of slowed down a little bit. Let's see what was next here. So clean this up, get rid of these. Traded higher, and what's the next one was the long. So we came all the way, we came almost all the way halfway back, and this is where this guy, come on, from lows of the day to highs of the day, we came pretty close to the 30. It was like an 83.75 down here, and we came to like an 84. So I felt like, well, that's pretty close to the halfway back long. I'm not really confident in taking a short because the long traded first. It was a nice short setup where the halfway back kind of lined up with the top of the first 30-minute range, and we did break this swing low by a tick or two, but I saw that as the halfway back long trading, and a pretty, at that point, it was a decent uptrend forming on the day, higher low, this being a potential higher low at we're about at that point. So I'm seeing, okay, consolidation here acts as support. We come down. We don't quite tag the halfway back long, but it was pretty close. And these kind of two highs also acting as a support level. And so when we rallied up here, I draw up the opposing short. We broke that 61.8. So then I went ahead and took the long like this. Basically the first setup after the larger halfway back. That one traded pretty nicely, got a first target hit, and then I drew up the next. When we broke this swing high over here, I just drew up the next halfway back, and that's where I tightened my stop to. And then things got interesting. So, little two-pointer there. Tightened my stop below the 61.8, and I got taken out right here, right at the top of the first 30-minute range. Now, notice triple top right here, and even if you exclude this high, a nice double top that came down, broke the 61.8, broke the swing low. So what do we want to do? We want to take the very first trade in the new direction, the new trend. So the trend was up, just got stopped out of the long for a small gain, but the trend is now breaking down, and in order to get the best bang for your buck, or the highest reward potential, you want to take the first setup in the new direction, which is short. So I got taken out of the long, and about 2 minutes later, the short setup at a 80, what was that one? 87.50 was the short setup, and that one really got moving. We sold off, came back to the halfway back long. I just drew up the tiny half. So this is another little trick. Let me clean this up here. So the short was up here at 87.50, and as we came down to the halfway back long, just drawing up from a swing high to a swing low and putting your stop above the 61.8 is, again, a great way to say, where would the trend failure be? What will be above the 61.8? So that's where I want to be out. If we don't break the 61.8, then I don't get stopped out and I stay in the trend, rather than getting freaked out and just closing out of the position. And then the bottom kind of fell out. I wish I could say I caught all 40 or 45 points, whatever it was, but I didn't. And that's really not the goal, to catch the entire move. The goal is to catch the meat of the move. And so I wrote it down. I got out with a portion here. I was trailing each candle's high at this point. So I got my first target hit right away. Tightened my stop. Got aggressive with my stop here and got out for a little bit at, was it like a 30, was it 79? We went up, I got almost just ticked out. Yeah, it was a 79.50 is where I got stopped out for kind of the middle third, and that was at the bottom of the first 30-minute range. And typically when we're above the first 30-minute range is high, so we're above here, I'm looking for us, if we come back into the first 30-minute range, I'm looking for us to cross and go to the bottom of the first 30-minute range. So that was a very logical place to get aggressive with my stop. We came down and touched the bottom of the first 30-minute range, and that's where I put my stop on a bulk of the position. Down here at, or the middle third, if you will, 79s. And then we went down a little bit further, and I just trailed the 61.8, and then trailed the next 61.8. And I got out of everything. I left one contract on after the 74.50. So I got taken out. I put my stop on everything else here, and I left one contract above the swing high, just because we started moving pretty quick. This was only about 2 minutes or 3 minutes, and so the benefits of having if you can get to like 3, 4 contracts, now you really start to have opportunities to scale out. With 3, you can do exactly what I just showed here. You have a first target, you aggressively trail your stop on the second contract, and then your third one, you're trailing the 61.8, and boom, you get taken out. That's a pretty awesome day. What would that be? About 20 points or so, a little more than 20 points. And then as you get, 5, 6, 7, 8, there's more you can do. I mean, even 5, you can do a lot of damage with 5 contracts in a good way. And for the most part, keeping your risk fairly small. So that last one, I was able to just kind of trail the swing highs. And the reason I left it at this point is because you come down, you make a new low on the day. I leave the swing high before the new low is where the stop gets moved to, and you can't tighten the stop to the next swing high until you make a new low. So the stop is here, you come down, you kind of bounce around, and you're messy through here. You can't tighten it until it breaks the low. So then we break the low, and then you can bring it down to the next swing high. And you could either use, here or here. It doesn't really matter. But that's the idea. You want to wait. So the stop is here above the swing high. You make a new low. You bounce. You don't want to bring the stop down until you break the swing low. And you just kind of repeat that pattern. You move it down, you make a new low, you bounce, you sell off, you bring it down to the next swing high, and then I eventually, this guy here is where I got taken out of that last contract. Notice we made a new low, we bounced, we made another new low, and then we came up and broke the swing high, and that's when you start to get into the potential of, reversing, the trend reversing. And, we dropped another 10 points from there, but at that point, you're looking at like a 33.59 entering almost 33.90. I mean, that's a huge move, so you certainly can't kick yourself for even catching 10 points of that is great. So that was my day. Lots of stuff going on today with closing out swing trades. It actually worked out well because there wasn't a ton I was doing right at the open with the E-minis, so I can manage the swing trades. And then a little bit later in the morning, the bigger sell-off. So you never know when a trade is going to be a big home run. So you don't want to swing for the fences every single time. You don't want to try to murder the ball. You just want to have a nice, smooth, fluid stroke. Okay, kind of repeat the same process. You go through the warm-up, you step up to the plate. Okay, you're in the right frame of mind. You swing your normal swing, and as it relates to trading, it's like, okay, here's a double top, or triple top, really. You break the swing low, you drop the high to low, you take your trade at the halfway back, and you're kind of going through the same process and motions every single day, and then maybe once a week or every other week you catch that big runner without trying to make a huge deal of going swinging for the fences. So if you have questions, I know there was a lot in there. Feel free, leave them in the comments, and I'll be back later this evening, can answer those. If you have anything more in-depth that you want to chat about, feel free to shoot me an email. It's tim@eminimind.com. Thanks, everyone, and have a great rest of your week.